All right, guys. Well, welcome back to another episode. Just want to put a massive thanks out to everyone's support from the previous update that we gave out on the global economy. Had great feedback from there. Again, we're back with myself, Will from Mining Store, and Tony from Forex Kings.
Hey guys, how's it going? Thanks for all the messages over the past few days. Just thanking us for the information we put out there. It's been really good feedback.
That's good, guys. And this episode, we're actually going to be going into the stimulus package that have been released by both Australia and the US, and we're going to be diving into a little bit about how they are going to support the economies, what we agree with from these stimulus packages, and what we potentially see as not the best moves.
Okay, so just a bit of an economic update here. Global indices have continued, another week of steep declines, I guess, as the COVID-19 spreads across the globe. During last week's webinar, the 19th of March, there were roughly, I think it was around 200,000 cases in total. Now, as of writing this presentation, we're at 378,579 cases. So in about 5 days, there's approximately been another 178,000 cases worldwide. In 5 days, the death toll has risen from 7,975 to 16,440 as well. Only in 6 days, it's more than doubled. So the Europe, the UK, US, and Australia is going further into lockdown. Today, Boris Johnson in the UK has put further measures in place to put in a complete lockdown now in the UK. So I think this is going to be a familiar theme now going across the globe. Everyone needs to go into lockdown now to prevent the virus spreading even further.
100%. I mean, there's some pretty large increases in numbers in a short period of time. And what we'll be doing over the next coming weeks, days, just depending on how things escalate, is keeping you guys up to date with statistics from other countries. It is a good measure to look at countries that in similar circumstances to us but have been hit by the virus earlier for projections of how that might affect our economy. So let's continue on here.
Absolutely. So kind of what's next, as countries go further into lockdown for unessential activity, we could potentially see unemployment rates rise. Now, most countries likely to go into lockdown, like Italy. Italy has, unfortunately, almost a 10% fatality rate. I think it's about 9.6%. A couple of reasons could be to do with their aging population. They do have an older average age, and also potentially to do with their outdated healthcare system as well. Okay, so Italy, it does have quite a high fatality rate, but look at the UK, they're also around 6%, 5 to 6%. So that is relatively high compared to other countries. So it's not just Italy that has a high sort of fatality rate. We've then got global stimulus packages, which are now coming in. So the Fed in Australia has announced over an 84 billion package. The first direct payments won't be made until April 27th, though. So we still have some time before any relief is potentially going into the Australian economy. The Fed in the US is yet to decide on a $2.5 trillion stimulus package as well. The Democrats blocked a bill by the Republicans last night. Trump doesn't agree with how the Democrats want to spend their money. So that's a major one we're waiting on. The implications of the package could see a devaluation of the US dollar and provide some support to US indices. Basically, if they sort of flood the market with $2.5 trillion, that means there's more US dollars in circulation. So it will result in a devaluation of the US dollar. The US dollar is at 4-year highs at the moment on the DXY index. So it has got potentially a long way to come down if they do start putting money into circulation. And at the moment, the world is currently printing money to stop the bleeding in the financial markets.
100%. And, we've already seen, this week, Australia's dollar has fallen so drastically. With the amount of printing that's going on, these stimulus packages, the money has to come from somewhere. We could see that further decline. Obviously, what that does for Australia is it does make our exports, I suppose, more tasty to other countries. They can pick up goods from our country for a cheaper price, but how much importing and exporting is really going to be going on during this time remains unknown, or when things will really kick back off again. Moving on, if we have a look into Australia's stimulus package that has been released, there is a really heavy focus by the government on small businesses, medium businesses, and individuals, and particularly those that are disadvantaged and most in need. So, as we can see here, we've got about $189 billion to be injected into the Australian economy, whether it be through payouts, whether it be through tax deductions or loans. And that's a very, very large number. That's not something to look at lightly. That's 9.7% of Australia's total GDP. We've been talking about at the Forex Kings between our team that this is going to be something that's not going to be paid off quickly. We could see the effects of this seep in for the years to come, 5-10 years. It's definitely a large stimulus package that has been injected there. For individuals, we're looking at, for a 6-month period, there will be $550 on top of current payment plans for those people that are already in need. It's for existing and future people that go out of jobs. On top of that, there's going to be also a $750 stimulus package to Social Security and veteran income earners. So after that, we have also seen quite a large announcement, and personally, I don't quite agree with what the government's done here for superannuation, but it looks like we're going to be able to access, for people that have had their wages reduced by any more than 20%, they're going to be able to access $10,000 from their superannuation. That access will be not taxed. And it will be before the end of this financial year and after. So a total of up to $20,000. Looking at how that could affect things like the stock market and people's future retirement, it could have a very drastic effect. One thing, just in note on the stock market there, if people are liquidating their superannuation, which is heavily in stocks, $10,000 to $20,000 per person, the government estimates that's about $1.2 billion of costs, and that could be close to $1.2 billion of liquidations across the stock market. Any notes on that, Tony, or should I continue on?
Yeah, absolutely. Yeah. It's quite. It's kind of like kicking the can down the road. It's a short-term cash grab for individuals. I guess what the government are trying to do is stimulate the flow of money around Australia, because at the moment, with everyone going into lockdown, there's no money flowing around the economy. So we'll see how that goes. I guess we'll monitor that over the coming weeks.
Absolutely. I mean, for some of those people in their 40s, 50s who had high valued superannuation funds from heavy in stocks, and then they've just been smashed down maybe 30, 40, 50% in some cases, and to liquidate now, pull out in cash rather than hold that for a recovery or hopeful recovery, could have some drastic effects on people's total super earnings. Let's have a look at businesses. So for businesses, there have been some, I suppose, where people would classify it as generous packages being put in place. There is a very, very big need right now to keep businesses stimulated so that they hold on to their employees and we don't go into drastic unemployment. I think measures out there are saying that we could expect the US even to go to 30% unemployment. Australia might be between 15 and 20%. These are all-time highs that we haven't even seen in previous depressions. So one way that the government are going to stimulate people or businesses to keep employees on board is by providing them up to minimum $20,000 up to $100,000. Now, that's not a handout. They're not just giving $20,000 or $100,000 out. It's based on the tax withheld from their employees. Okay. Now, I think that's actually quite a good policy. It's linking payments to business staff and wage tax withholding, and it incentivizes business to actually keep those employees on board. There's about $31.9 billion from the government estimated to go towards that incentive. Government's also going to be guaranteeing, being the guarantor for loans, 50% of loans, which will help businesses to obviously take out those loans with a government-backed guarantee of 50%, and push that money into further growth and stimulating the economy. Obviously, aviation, as we know, has been absolutely smashed. We talked about on our last podcast, we've seen Qantas go down from as high as $7. I believe they got down to nearly $2 or $2.50. Is that right, Tony? I think around that level.
Absolutely. And, I think obviously they're going to support them with that funding there. So $750 million. However, They're probably going to need a bit more than that. If you look at Wuhan, they just announced that they're going to be looking to stop or create a lift on the ban of travel in Wuhan. That's only going to come into April the 8th. So people are now going to start to be able to travel freely. So they've gone from January to April without any travel. So it's a quarter of the year essentially without any travel. So if that's going to happen in Australia as well, it's a quarter of the year that airliners are going to have without any kind of income, I guess. So 750 million there for support, but obviously there could be a bit more downside on those stocks prior to a rally on them.
Absolutely. I mean, 3 months, as you say, quarter of a year, that's a long time for no travel. Australia might be even more harsh on these restrictions. We don't know. But yeah, that's obviously a massive hit to aviation companies. So, we will be talking later on about some opportunities. There might be opportunities to pick those stocks up at a cheaper price. But right now, definitely not the time to rush into it. As for business growth encouragement, there's been a couple of other incentives that have been put in place. We won't go into too much detail, but the higher level overview of it is there's an instant asset write-off increase from $30,000 to $150,000. There's also one of the ones that I think is probably the best of this is the apprenticeship and trainee policy. For anyone that loses their job and they're picked up by another business, that business will actually be able to get up to $7,000 per quarter handout, or I suppose to alleviate the pressure of the employee's wage. So that's a great one. Keeping people in business right now with jobs, keeping people happy is a very important thing right now.
Absolutely. This is, a pretty interesting chart here. So this is more to do with the kind of the US stimulus packages over the last 2 years. Over the last two recessions. So if you look back, the last two times they provided a stimulus package, it actually created a bit of a lift in the indices before facing further selling pressure. So this is going to be the biggest economic stimulus package from the US in history, roughly around 2.5 trillion US dollars. We're already down to kind of 2015 levels in the S&P 500. However, judging by the last two stimulus acts, this may not actually do too much in the short term for the markets. We could still see some downside over the coming months. And this is obviously just a chart of the S&P 500, just highlighting where we are. So we're now at 2015, 2017 levels. If the $2.5 trillion bill does get passed and the Democrats and Republicans come to an agreement, we could see a bit of a lift from this level, short term anyway. So we could see a bit of a dead cat bounce before further selling pressure. On the flip side, Trump is pretty against this bill from the Democrats. If they do not come to an agreement in the coming days, we could see a clear break of this level as well. It's quite an important amount of money going into the market. So they do not come to an agreement. If both parties are going to continue blocking each other, then we could also see a clear break of this level, pushing down towards 1,800 level, possibly 1,500 as well. So not looking too good at the moment.
Definitely. I mean, going back all the way to 2016 lows almost, that's a lot of time and equity being wiped off the market. But we absolutely will be keeping our eyes open for these key levels, and we'll be reporting on them as we push through them or bounce off them.
Absolutely. This is just something we've been tracking for a while. So unemployment, we are expecting unemployment to increase. I think Goldman Sachs were suggesting a 20 to 30% increase in the US. So basically in 2020, early 2020, unemployment in the US has pretty much been in record low since 1970. However, generally speaking, when we do get these record lows, we do then get an explosion higher of unemployment. The coronavirus could be the catalyst for this as well, if everyone's going into lockdown. So, and that can sort of push the US into a recession. Unemployment is a backwards looking indicator, so it is a delayed indicator. However, we could see unemployment skyrocket from here over the coming months.
Absolutely. And as we said before, we've experts are kind of predicting there's going to be close to 30% unemployment in the US. So we'll definitely keep our eyes on this one, but not looking too good.
Now, looking at Australia, it could potentially still get worse here. So just looking across a lot of the major financial institutions, Australian unemployment is forecast to rise from 5.2% to possibly 16%. That's coming from JP Morgan. With that, house prices are expected to drop by 20%. That's coming from AMP Capital. Just go to this quick. We'll show that chart in a second. Estimates for GDP growth in June is down from minus 3.2% to an even lower minus 9.7%. They estimate for every 1 percentage point fall in domestic demand, growth is usually associated with about a 0.3% increase in unemployment. So, I think that comes hand in hand. Hospitality is going to get hit very, very hard. Australia's economy is also dependent on immigration. Moreover, immigration will have added 15.7% to our workforce participation rate, 5.9% to GDP per capita growth as well. So without immigration at the moment, the population would stagnate and our economy would go backwards. So at the moment, obviously, international flights into Australia are banned. Immigration is going to be decreasing with jobs decreasing around Australia as well. A lot of immigrants from the UK, like myself, would have to go home. So that's also going to take away from the Australian economy. Like I said, international flights being banned for the foreseeable future. Airlines will struggle. Very few will last, and they are going to rely on the government, like they've got a stimulus package coming out. And like we said, hospitality industry is set to suffer across Australia as well. Australia is built on, a lot of cafes, restaurants, and bars, and they're all obviously going to be banned for the foreseeable. At least 2 weeks. We don't see it being any earlier than a month, in all honesty.
Yeah, absolutely. I think, bare minimum 2 weeks, but we could easily see, month, 2 months, 3 months. It really just depends on the state's decision and federals as well.
Absolutely. And this is just a bit of a chart of the auction clearance rates. So if you look back to the left-hand side, 2008 financial crisis levels there, it dropped from 80% in Melbourne all the way down to 50%. We could be looking at something similar now as well if unemployment does start to push higher very quickly.
That's exactly right. I mean, if unemployment pushes up, people can be seen to default on their loans. They could put a massive scare into the market. I think based on history that, the people selling will hold off for maybe 1-2 months. But as soon as one person gets pushed below the median house price, it can create that kind of waterfall effect on the property market. So definitely going to be keeping an eye on the auction and clearance rates and reporting on it as we do.
Just with that as well, with the auction clearance rates, remember in Australia, a lot of people own multiple properties. So, if immigration decreases and immigrants are having to move home because there's no work, it's going to put a lot of pressure on people who have multiple properties that they own as well.
Absolutely. We'll probably cover the property market a little bit more in a following podcast, but we'll wrap this up for today.
Perfect. So just a bit on when will it end? So a couple of things to look at in terms of when will there be a turning point. Now, we've already seen one in China, in Wuhan. They're lifting the travel ban 8th of April. Something we want to keep an eye on is European numbers reaching a peak. We'll post a link in the description below, which gives you up-to-date figures of the coronavirus. We're also going to be looking and watching the news, trying to figure out when the focus shifts from fatalities to the number of recoveries as well. If countries with fewer total cases can keep the number of cases low, preventing another outbreak, that's also going to be positive. So here in Australia, if we can keep the figures below kind of 10,000, like South Korea, they've managed to keep theirs at around 8,000 for a few weeks now. So they haven't increased for a while. That's going to be a good sign as well. So I guess main things, waiting for European numbers to kind of peak and plateau, and also wait for the news to shift from fatalities to recoveries. Any news on a vaccine as well is going to be positive to the market as well.
Absolutely. Yeah, I think, that could change things very quickly, mostly for, the majority of people's fear speculation. With things like a vaccine in place, people can, I suppose, calm down and have some sort of uncertainty resolved there. So that's it for today, guys. Again, we really appreciate all the support you've given and the feedback that we've got. Leave all your questions in the section below. And if you have any topics